Good morning. Morning, everyone. Welcome to another Wealth Coffee Chat. Good to see a few of the early birds already on and up and at it. Morning, Alison. Howdy, good to see you, mate. Tim. We've got Graham. We've got a Facebook user or two behind the veil, behind the veil, Facebook veil. Good morning, Jeff and Deb. Hey, great to see everyone on this morning. Fabulous to have you here. Well, we got, I think we got Jimmy there. Yep, there we go. Jimmy, good to see you, mate. Thanks for joining another Wealth Coffee Chat while we're sort of warming up and getting things going. Most of you know this, but Jason Witten's my name, if you didn't already know. And thanks for coming along to another Wealth Coffee Chat where we try and sort out the fear from the fact when it comes to property investing, while we're having a bit of a coffee hit, a bit of a pick me up in the morning, get things going as we need to do each day. We catch up at about 10 past 8. So there you go. Today, I thought we might talk about some of the lessons we can learn from some of the most successful property investors in Australia. And the most successful property investor in Australia, I've talked about a few times. Who is that most successful property investor? Most of you should know this. Some of you know it. Morning, Luke. Good morning, mate. Howdy. Tell me in the chat, folks, who is this person in the top 5, actually, of the top, the wealthiest Australians in the top 200. Just came out, I think, on the weekend, or might have been last week, when it came to the Fin review. And hey, there's Christoph. Well, I'm certainly aspiring to get up there, Jeff, in one way, shape, or form. My runway is underway, but certainly not even close to this legend, Harry Triggerboff. Harry, big Harry. And he's certainly an interesting character, that is for sure. What can we learn? What can we learn, folks, from Australia's most successful property investor? And there's a few things we can learn, which is awesome, which I think are worth understanding. So I thought we might talk through that this morning and have a little conversation when it comes to what can we learn from someone who certainly is very successful when it comes to property investing. Harry Triggerboff, there he is. I think at the moment, if I was looking the other day, Harry, 89 years old, I think it is. Maybe someone can check that. 89 years old. Oh, hang on. The fat fingers. There we go. 89 years old. Oh, the good old, let's try this. We'll do this. Give me 30 seconds. We've got some technical glitches here, folks. Some technical glitches in this morning. While we're going, someone should tell a joke or something. I've got that one down pat. All right. That's good. Yeah. All right. Hopefully that should be working. No. In a moment, we'll talk about Harry. Give me a second. All right. Hopefully, there we go. Got that one. Add the camera, and we're going to do the share screen. All right. Looks like we're away, folks. So let's have a look at Harry here and what's Harry got to teach us when it comes to, don't give up for sure, Tim, as we go along. So what's Harry done? He's in, I think, now close to 90 years old, 90. And there he is in position number 4. He's always been sort of in the last decade or more, well up there in the top, 20 wealthiest in Australia when it comes to property investing. But how does Harry invest? How does he invest? Because many of these other, top wealthiest in the country here are certainly, when it comes to the idea of real estate, Frank Lowy down here. Frank is in, Westfields. Okay, Westfields. Okay, Westfield shopping centres. So that's related to property. Certainly when it comes to mining, which is a lot of the top 2, that's got to do with real estate, doesn't it? Or access to property, digging some dirt up. And, Clive Palmer as well in the real estate space. So, but directly as a property investor, how does Harry do it? What does the wealthiest chap in Australia when it comes to property investing do? 83 years old now. I think this was from a few years ago. Harry owns, and this was from 2016. So if we add, what's 16 to, somewhere in his 90s or close to 90, isn't it? Owns 6,000 investment properties. That's crazy good, crazy amazing. Let's have a look at how Harry does it. This is the way the most successful property investor in Australia structures his assets in his portfolio, folks, as we go. He has in his setup, in his portfolio, 31% of his portfolio, 1/3 on the rental property. He builds and owns and keeps properties to rent. And, Harry's a smart fellow. He's got 6,000 properties. 6,000. Oaks, that's pretty amazing, right? 6,000 properties, which is very cool. Away you go. What is the other thing that Harry does? This is an interesting thing when it comes to what happens in this space here. If you look, a good chunk. I'm trying to make this work. We've got to include the empty land as well. If we check out all of this, this is him developing, right? Developing, creating wealth when it comes to his real estate. Still to do with real estate, folks. All real estate structured when it comes to all of these things. Everything has a real estate flavor for Harry. That's interesting. And then last but not least, how does he accelerate his income when it comes to some of this world? Well, here's what Harry does. He does serviced apartments, which is short-term letting. Right, short-term letting when it comes to the world of property investing. So if we, as property investors, wanted to maybe, think about how we could emulate Harry Triguboff, one of the most successful property investors Australia has ever seen, Where would we start? What would we do, folks, when it comes to doing this sort of stuff? And that's part of what we teach here at Positive, part of the structure, the ideas when it comes to setting a plan and creating an investment idea. Let's invest like Harry. What would Harry Triguboff do? So let's do this timeline. How many properties, folks? Tell me in the chat. Let's do a little conversation here. How many properties did Harry Triguboff start with, right? When Harry started all these years ago, how many properties did he start with? Does anybody know how many properties, how many deals did he have in his portfolio? He started with 0. Everybody starts with 0. And this is a really interesting thing, right? Really interesting thing. You know, everybody starts with 0, you know. Let's go. When did Harry Triguboff start? Meriton. Let's go. Want to find out. There we go. Yeah, I thought it was that. All right. So he started with 0. Everyone starts with 0. Everybody. So every single person, everyone says, oh, you know, that's good for that guy because he's rich or whatever, right? Harry started with 0, right? When did he start, folks? When did he start? Folks, tell me right now. How long ago did Harry Triguboff start? What was the year? And I just looked it up on YouTube. Yeah, it was, Luke. You're dead right. You're dead right. So he started with 0, and he started in 1963. 1963, and his first deal, right, was in Meriton Street. Okay, Meriton Street. You're dead right. All right, which is kind of cool. How old was he, folks? How old was he? Did he start when he was 5 years old? No, he started when he was 30 years old. 30 years old. He started 1963. He started when he was 30 years old. And what is it today? It is 2023. And how many years is that? That's 60 years, isn't it? Or was that 70 years? Someone do the math for me. 60 or 70. Anyway, it's a long time. Today, 2023. 2023. That's got to be 60 years, right? Anyway, mental blank. I haven't had enough coffee this morning. 60. Boom. You did right, Luke. Good on you, mate. I was struggling there. My mind blown. So, if you have aspirations to wealth, now, I don't know, like for me, would be fabulous. Harry's built an amazing empire. I don't see myself aiming for, 10, 15, $30 billion. I don't see my goal in that space at this moment in time. But if you have a goal, what's a lesson we can take away from Harry here? All right, what's a lesson? Okay, let's just do this so we can take some really interesting lessons away. So he started with 0, and now he's well over owning 6,000 investment properties. Started with 0, go to 6,000. All right. And his first deal, he started in Meriton Street, and he built 4 townhouses with a bunch of his mates, and then he kept one, right? And so the linear conversation, the process of Harry Triguboff like this, all right, goes like that. Okay. Repeat. Yeah, exactly. All right. Now, when I talk to you guys, what do I say? Minimum time frame, guys. Minimum time frame. Like how long do I say? And to be honest, the reason I don't say longer is because then most of us wouldn't even start, right? But let's be frank here. You got to think you can get there at some point when we talk about this stuff. If it's too far away, we don't believe it. But let's take some lessons here from Harry, right? When we talk as a property investor, minimum time frame, 15 to 20 years. Harry Triguboff is 60 years in. And the conversation of compounding value, compounding wealth, folks, compounding wealth is really what I want us all to really appreciate. Even myself, when I was listening to some of the interviews with some of these wealthy individuals, 10% compounding growth over 50 years, you'd be pretty happy, all right? Even 5% compounding growth over 50 years, you'd be pretty happy. So let's have a look at that, all right? So the horizon is in the future. And to be honest, if you want to get wealthy, you just need to do some simple things and, let it ride, okay, as a property investor. So let's have a look at these conversations, these ideas. The beginning, this is the acquisition stage, right? This is what we call in our world the consolidation stage, and this is the lifestyle stage, right? Where our cash flow and our income generates pretty significantly. What do you think Harry's cash flow is from, 6,000 properties? I don't know, it'd be pretty good, right? He's got businesses that, create other cash flow and accelerate his wealth, but all in all, the big lesson for me, hopefully for you, is the compounding process over time from someone like Harry Triguboff is pretty important. What did he do? What helped him accelerate some of this stuff is pretty interesting when it comes to these conversations. And we've talked about this before. The idea we have, regular income from your residential real estate, 5% income, 10% income, 15% income, 20% income, and these different quadrants depending on what you invest in: residential real estate, commercial real estate, some funds on the stock market, and then sort of private joint ventures and so on. Right, we've talked about that before. But let's have a quick look at, is this possible for you and I as property investors? Is it even possible, the compounding effect? Well, it absolutely is. Let's take a look at, and you can download this calculator from, let me get the view here. We'll get rid of that. We'll get rid of this, and we'll see the thing. You guys can have a look at this, and you can download it at any time you like. I put 60 years to the goal. Check out this, all right? You go and you get yourself one home, which is your launch pad. You guys know this. We talk about this all the time. You wonder what his land tax bill looks like. Exactly, Allison. Yep, he'd be paying a bit of land tax. Yep. And then over time, 1, 2, 3, 4, 5 investment properties, okay? You don't have to knock it out of the park, folks. You don't have to own 6,000 properties like Harry, do we? But it'd be fine if you want to. And so let's have a look at this. You start out and we go, all right, we've got a 15-year horizon. What does it look like for us as property investors with a 15-year horizon to our goal? And that's not bad. If you start out now, we're only talking about, 5% rental yields, and a rent growth of 4% per annum and capital growth of 5% per annum. And we can change that in a second. I'm going to show you a few things. Let's go out 20 years and have a look at what our cash flow and our wealth might look like. Equity's pretty good. Check out the equity up here, like pretty significant. Total passive income looking good, over 20 years. Let's go out, 30 years and have a look. And 30 years, passive income of 500 grand. It's pretty significant. Even if we dialed that back, you're still getting pretty good income, and your equity's 18 million. Oh, let's chuck it out there for Harry. Let's go out there with Harry. 60 years, no debt, 0 debt, 79 million, $2 million worth of passive income. Mind blowing. It's almost incomprehensible to think that you could do that. Now, at some point, 60 years down the track, maybe some of those properties that you own are development sites. You might sell them, you might develop them, like all sorts of things, folks, as we go. But it's totally doable. And, you know, even if you halve that number, even if we were right, even if we got halfway there, would that still be okay? Would $1 million passive income and, you know, being worth $40 million debt-free be okay, folks? Let me know. Let me know. Even if we missed this by 50%, would it still be okay if you buy between 6 and 7 properties that you know you can own and keep for a long time and create wealth from? Would that be okay? Would you get there? Would you complain about that? Well, if you did, you'd be a bit entitled. Anyway, there you go. Yeah, be a good start. You did right, Mick. Be a good start. Yeah. So there you go. So, you know, what's the lessons? What lesson can we take away from, you know, Harry Triguboff, Australia's most successful property investor? Well, for me, the big lesson is time is the winner. Time is the one, right? Time's the one. Time's the one. He started at 30 and now he's 90. He picked a strategy. He stuck with that strategy the whole time. Buy some properties, keep some, create some equity. He accelerated it. He accelerated it through developing. That's fine. Maybe you do, maybe you don't. You know, your job brings extra income to your property portfolio, and you don't necessarily have to accelerate the income if you don't want to. That's fine. Don't do it if you don't need to. All right. There you go. Allison, you know, there you go. Once you get things going, folks, yep. Once you get things going, once the momentum goes, once you've had one or two, you know, market movements in your favor, you know, the value starts to stretch out there. And, you know, really, let's face it, it's probably more important not to do dumb things than it is to do semi-smart things, right? You know, once you got a bit of dough, just don't do anything stupid. Anyway, there you go. Hopefully that made sense. Hopefully that makes sense. For me, it was quite an interesting bunch of articles to read, and it really changed, even changed my psychology, to be honest. You know, I'm like, okay, don't be in such a rush and a hurry and put so much pressure on yourself. You know, take some time. But maybe that's something, as I'm getting a bit older, I'm maturing when it comes to my my enthusiasm for speed on this stuff. Anyway, there you go. All right, folks, that's it. I'm done. Wealth Coffee Chat, over and out. Over and out. Let's do another one tomorrow, huh? What do you think? Thanks, folks, for joining me today. Let's catch up tomorrow if you're up for it. Be cool to do that. Hang out, as always. Let me know if there's anything that you might want me to have a bit of a chat or a yarn about in the chat. I always read it afterwards. So make sure you leave me a little note as you go. But other than that, folks, we're done and dusted. Thanks for joining me today. Remember, this thing's a marathon, not a sprint, folks. Takes time to create that wealth that you want. Be patient. Be patient. Be like Harry. What would Harry do? I like that. I'm going to coin that phrase. What would Harry do? Harry would be patient. He'd keep moving forward, but be patient at the same time. Let's do that. All right, folks. Thanks for joining me today. Take care. Bye for now. See you tomorrow.